Sector employers added only 119,000 jobs last month. That is way lower than expected. Good morning.
Okay, in the last 3 weeks, almost all of the indicators have pointed the economy to head south. Job creation cut in half, new home prices down, cash in your pocket down, rate of growth for the overall economy down. And now we have this private sector report, which is extremely disappointing. Only 119,000 jobs last month. That cuts the private sector job creation rate almost in half from the month before. It confirms the view that the economy is now headed in a weaker direction all over again.
So you think we're going backwards then?
It looks like it. We had a rate of growth of 3% at the end of last year. Now all the indicators say that that rate of growth has not been maintained and we're weakening. We're heading south. We're going down, backwards.
Why is this private sector number so important?
Because the private sector is the vast bulk of America's economy, and you've got to create jobs in the private sector if you want to get that unemployment rate down. It's important because private sector rules the American economy.
Couple that with the information we've picked up over the last few months when the government's been cutting jobs too.
That's why everybody's nervous about Friday's big jobs report, which will include any cuts in government jobs. You'll get the overall number on Friday. If you've only got 119,000 private sector jobs last month and you're going to cut and take away government jobs, we could, repeat, could end up with less than 100,000 new jobs come Friday morning, and that would be a very bad report.
Well, let's put this in a little bit of context for you this morning. The jobless rate has been above 8% now for 38 straight months. That is the longest stretch above 8 on record. 22.8 million Americans are unemployed or underemployed, meaning that they're only working part-time or that they're making a lot less than they once did. The average duration of unemployment in the country right now is roughly 10 months.
Now, here's a ripple effect now, too. It's not much better overseas. A new report just out showing how bleak the numbers are in Europe. A new record for unemployment in the 17 countries that make up the Eurozone, a new high for that number. Jobless numbers over there rising to 10.9%, the highest level since the euro was launched 13 years ago, 1999. And now you ask, how does that impact us here at home? Roughly 15 to 20% of corporate revenues of the S&P 500 companies come out of the continent of Europe. More than 20% of all U.S. exports go to Europe, making it the nation's largest trading partner. We are locked in with them.